Okay guys, welcome back to the channel. Today we're going to be taking a look at Cardano's ADA, and I'm going to be sharing my thoughts and opinions as to where I think the price action is going. As I get into this video, do smash that like button, subscribe if you find it useful and informative, and let's crack on. So here we have Cardano paired up with USDT. We're on the one-day Binance chart, and we've had some pretty interesting movements with the price action most recently, right? And well, we need to kind of put that into perspective on whether or not we're getting a significant break to the upside, or whether this is a corrective series of events that are going to ultimately lead us back down to our accumulative range. Now, if you're not familiar, we have been scoping out a number of accumulative ranges for Cardano over many years. Now, originally, this kind of started with the high ranges of $2.26 to $3.10 way back in 2021, and obviously the bear market where we predicted out the lows of 22 cents. And well, we actually called potentially a 23-cent low in 2022, but man, our original kind of thesis actually stuck, and we did get that 22 cents, but it was a little bit later than expected in June of 2023. Now, with all of that in mind, we started tracking a pretty interesting structure to the upside from late, actually mid 2023 initially. The first thing that we scoped out was this range right here, 32 to 38 cents, and then an accumulative range down here. So if we were, not looking and didn't have any speculative buys at 22 cents, the next area that we highlighted was this one down here. And any OGs, feel free to comment down below if you remember this, but it was 23.46 cents to 28.87 cents. That led us to the next distribution event and distribution zone, which was between 57.38 and 85.52 cents. After that, we then scoped out the next accumulative range. This was 27.49 cents to 42.19 cents. And then that led us into the 2024 breakout, into 2025 distribution. This event was $1.01 to $1.37.71 cents. We didn't hit the upper end, but obviously we did see a lot of areas on that low side getting hit. And then that brought us to our most recent accumulative range. Now, one of the things that the eager-eyed people will notice here is that when we've had these accumulative ranges, well, ADA has actually spent a fair chunk of its time inside them. However, this most recent one is different, isn't it? We've only tapped it 3 times and that is it. And it's always been just the upper area, just north of 50 cents. It's almost like every time the price comes down towards this 50-cent area, there's a huge buy wall and it just sends the price rocketing to the upside. First, we saw this move coming in here in early March, taking out well above $1.15. Then it went back down to 50 cents. And then we had another rally back in May of 2025 where we were kind of going for about 87 cents, then back down to 50 cents. And then we pushed back up in July this year, hitting 93 cents, and then pushing back up again a little bit further to tap $1 before consolidating back down to the 50 EMA, 50 SMA. Now, you might be thinking, why are you giving us a history lesson? We all have eyes, we all have ears, we know the history. Well, I'm telling you this because what we're tracking right now doesn't necessarily mean that we're done with our accumulative range. Like I say, history tells us that there's a fair amount of time spent inside these accumulative ranges, and just spending 3 days down here doesn't really look like ADA's had any accumulation really occurring at the actual range where you would expect it to. Now, could be that this is the new way of going forward, very possible, but I'm a little bit skeptical. I'm not convinced that that is what is going on. I think there's the potential here that we're just going to be tracking what I would call a bit of a corrective pattern to the upside before falling all the way back down to that accumulative range. So on that note, what do we do? Where's the next range where we should be thinking of coming out of positions, and where do we actually go ahead and buy the positions? Now, it's important to note that I am not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and there's many different ways that this can go. Ultimately, you and you alone are responsible for your own financial decisions. And if you don't have access to a financial advisor, you should probably find one and get access to one. I am no financial advisor. I'm just a guy on YouTube with a chart showing you what he thinks is going on. There's a disclaimer in the description down below as well. Should you need any more information about it, feel free to join us in the Discord. Anyway, Let's go ahead and now pay attention to this, because I really wanted to kind of hit home with a history lesson before I start talking about what's going on here and why this is really important for Cardano. Now, we do see some slight differences, okay? And this is really important, right? Because we have a swing low over here on the 3rd of February. It comes in at 50.6 cents. And we had a second one over here at 51.1 cents. And then we have this one. This most recent one is 51.1. Now, why is that more important than the one that led before it, or the two that led before it? Well, to start with, we have a lower low, wick to wick, between these 2 points. We have one coming in at 51.1 and one coming in at 51. Now, it's 0.1 cent, right? 1/10 of a cent. But the price went there. And that's really important from a technical analysis standpoint, specifically with which one is actually lower than the other. Okay, that changes structure. Even though there's no closed positions there, it changes the structure from an Elliott wave point of view and what that means for the sentiment that's underlying and buying all of this stuff, or selling in some cases. It's a really important kind of stat, right? We can't just glance over even 1/10 of a cent difference. So we have an interesting start point then down here at 51 cents. It's not as low as the one that we had previously, because that was over here coming in at 50.6, right? So there's a quarter, I guess, of a cent, right? Anyway, nonetheless, it's an interesting time, because what we have going on is a 3-wave correction to the downside here, right? So I'm going to draw this in with an A, B, and C structure like that. Now that 1/10 of a cent lower is exactly a double bottom situation that you could say is minimum expectation of a C-wave structure. So we completed a corrective pattern. We can also see that there's 3 waves going to the upside here, and then 3 waves coming to the downside here. That means that this potential move can be pretty interesting. It can be nowhere near done yet. We can see continued growth, but it does not mean that we can't move down, right? In the same way that we see this initial bounce from 50 cents, we've come up, we pushed back down, we pushed up again, right? You can see that there's this collapse before that last little push. Same when we moved down. We collapsed down, then we bounced, and then we collapsed down again. Now we've moved up, but we haven't really collapsed, not as such, not in structural terms. So what's actually going on here? Well, we have wave 1, wave 2, wave 3, wave 4, wave 5, initial completed. Then we have a 3-wave drop, pretty standard so far. Now, inside here, we have the potential setup for another 5-wave pattern. So we have a wave 1 hitting this little barrier on the smaller timeframes, a wave 2, we're in a wave 3 right now, looking for the 4, looking for the 5th. Now that's actually just your wave 1 on a much bigger scale. So let's go ahead and draw this out so you can kind of get an idea as to what I'm talking about here. I'm thinking that we could be on the cusp of a significant breakout for ADA, but it is going to have a few caveats to it. So let's go ahead and roll this in here so you can kind of get an idea as to what I'm talking about. We're going to be looking for $1.56 to $1.84, and that is going to be a typical move, not a guarantee. Nothing is guaranteed when it comes to crypto, right? So that's a typical move. What I would be looking for, and I'm going to delete this little mini 5-wave pattern here, and I'm going to show you the bigger macro one, which would be a wave 1. You'd have this little collapse here for a wave 2. Lots of people will be doom scrolling and telling you that it's over, but actually you end up with a wave 3, 4, and then 5 tapping that 156. This would then form, you guessed it, A, B, and C, which is the story of what we are tracking when it comes to Cardano's price action. Why are we tracking that? Well, we're tracking that specifically because that is the story of what has been going on for this entire cycle so far. We have 3 waves up, and then we have a 3-wave collapse. We then have another 3 waves up and another 3-wave collapse. And this is a C-wave pattern here, right? And as such, I am tracking what should be a 5-wave pattern internally. Now that can be made up of 5 ABC structures, for example, or I've got all these ABC structures just wrong, and actually these are all nested 5-wave patterns, also equally possible. So we need to be very mindful over what happens next, because we could see a very explosive move for ADA soon. On the conservative side, we're talking 150 to 180, but it's possible that we continue running to the upside. Now, if we do hit just $1.50, it is very possible for us to come down and spend more time in the cumulative range, a big collapse for ADA. We don't want that, but it is something that is possible. So we need to be a little bit mindful of it, which is why I wanted to talk about how we spent so much time in these accumulative ranges before we hit these distributions. Now, it's possible that actually it's just 3 taps, and then we go to that distribution event a little bit higher in the price chart, targeting $1.50 to $1.80, for example, before coming back down. And every single time that we have those distribution events, the accumulation range goes higher in the price chart too. So ADA is looking pretty promising, but let's go ahead and take a look at a few indicators outside of the price action then to see what else is going on. Well, we can see that on our daily chart here, it is in an overbought area and it has got a bit of a negative cross. This means that there's a high probability that we're going to be looking for a bit of a push to the downside and some point in the next week or so. So pay attention, because we could be looking at better entries on some long positions. Now, if I take off that stochastic RSI and bring in the relative strength index, this one is just one step removed from the price action. You can see that there's the potential here for some bearish divergences starting to form. In fact, you had one back in August of 2025, which actually relates to the price action moving into higher highs, but the stochastic or the relative strength index just not really having a higher high move. So if we do start breaking out like this without any decent kind of momentum behind it, you bet ya that's going to add up to some bearish momentum and would lead us back down towards that 50-cent accumulative range. Maybe a little bit higher, to be fair, maybe sub 80 cents. Anyway, let's go ahead and turn off the relative strength index and bring in the MACD histogram. Now, the MACD histogram is an interesting one. It just shows visually how the market is currently behaving. Now, this is a daily chart, and we can see that there's some really interesting stuff going on with this price action. We have higher highs on price, but whilst we have higher highs on price, we actually have lower highs on the histogram. This gives us a great visualization of what's occurring here. Basically, this price action is not sustainable. Okay, and we can still see that if there's higher highs on this price action, whilst we get lower highs on our histogram, that's a recipe for a breakdown. So we want to be aware that that is a major concern to be thinking about on the daily time frame for Cardano's ADA. But like I say, I'm still pretty hopeful that we have that $1.50 breakout towards $1.84. But let's go ahead and roll this up into a weekly time frame, because, you know, it's always great to zoom out just a little bit to see the bigger picture. Now, inside this bigger picture, we can see some pretty interesting things. In fact, there's a lot of different Fibonacci retracement tools going on for one. So I'm just going to go ahead and remove some of these numbers off of the chart because we just don't need to see them just yet. Now, the key one, and this is a key one that we really do want to see, is $2.27. This goes way, way, way back to actually where we first started to see some of these distributions and accumulative ranges. Now, why we tracked an ABC structure out towards $1.01 to $1.38. Right, where we consolidated and where we had our distribution event. But we wanted $2.27 because that was 1.618. Now, it is possible that we can still do that, right? And if we do have this overextended run towards $2.27, well, it changes the game just a little bit more when it comes to Cardano. However, due to the fact that we haven't done that yet, and everything that we've seen inside the data on the smaller time frames, it tells me that this particular structure is actually just an A, B, C to the upside, followed by 3 waves to the downside, and then we're looking for 3 waves more to the upside. Now, in that world, that conservative world, we're looking for a target between $3.12 and $4.77. That is a conservative one, right? Because although it would be higher than our 1.618 target, the route in which we would get there would be slightly different, and it would be kind of choppy. It's kind of been the story of what I've been saying for quite a while. Basically, we have this big W wave up here. We have this Y wave towards the 200 EMA, and then we move up towards $3 to finish things off. That would be made up of an ABC structure followed by an ABC structure. So what I mean is we would end up, guys, with that first kind of area of $1.50, a retracement, and then $3. That there would basically complete out our Y wave structure. Okay, so we would be looking from going from, let's say, $1.50 back down to sub $1 again to kind of really kind of shake the market out before rallying all the way to the upside. So we are talking double top situation, basically with 2021. Okay, that is the most conservative outcome that I can come up with and can think of. But like I said, I would be expecting a 5-wave pattern here, and I wouldn't be expecting just 3 waves. So therefore, there's still possible that we actually break out completely and head out towards the 1.618 at $9.48. More moon boy or kind of more hopium maybe. So we have the conservative $3.12 to $4.77, and then we have kind of the more ambitious $9.48. Okay, and I want to say it's ambitious and nothing is ever guaranteed when it comes to crypto. But if we can hit $9.48, it would signal even greater heights out towards some of these really nice juicy targets around $38 for ADA. No guarantees, of course. I'm not liking what I'm seeing inside of the data to support such a big, bold move. But there are some variables that are not inside any of this data here. And a lot of that happens to do with the SEC, the United States, and something called the ETFs. If they get approved and Cardano ADA ETFs launch, well, we could see the gloves come off and something very, very different emerge within the data of the charts. Those nested positions that could see an explosive break to the upside. Let me show you what that could look like. Okay, we'd have this wave 1, this wave 2, this massive wave 3 coming up into the charts here, a big kind of cooling off before finally pushing out towards $38. It's a big if, it's a big wild card. But if it happens, this the ETFs that would be the catalyst for such a thing. On that note, you can let me know what your thoughts are on all of this in the comments down below. Join us in our free educational Discord server that's linked in the description and continue the conversation down there. How high do you think ADA could go by the end of this bull market?